The Japanese yen stabilized a bit today after the massive sell-off earlier this week. Finance Minister Jojima said that the current Prime Minister Noda had instructed the government to compile a fiscal stimulus package by the end of the month, including a possible supplementary budget. However, it's thought that compilation of the extra budget would be difficult with the House dissolved. Economy Minister Mihara said that stimulus using reserve funds is insufficient to support the economy. Noda is expected to dissolve the lower house today, which will trigger an election, which would be held on December 16th. And it's believed that the Bank of Japan might hold off from additional stimulus before the election. Nonetheless, the likely winner of the election, LDP leader Abe, will push for more aggressive policy to bring Japan out of recession, including unlimited easing, sub-zero interest rates and increase in public investment. A key focus today will be U.S. President Obama's meeting with Republican and Democratic leaders of Congress at the White House on the issue of the fiscal cliff. Obama and the Republicans remain divided over ways to resolve the fiscal cliff. Obama blamed the Republicans for objection to his proposal on a tax hike and predicted if they continued like that, middle-class families are all going to end up having a big tax hike. That's going to be a pretty rude shock for them, and I suspect it will have a big impact on the holiday shopping season. Dallas Fed Fisher criticized that the Congress has behaved disgracefully in discharging their fiscal duty, and he warned that only the Congress could save the U.S. from fiscal perdition, not the Fed. Meanwhile, Fisher also noted that the Fed cannot be endlessly purchasing the United States Treasury and agency debt. Philadelphia Fed Plosser questioned if the open-ended QE3 would encourage investors to take excessive risk on the impression that the Fed would also rush to save the housing industry. Plosser warned that the bigger the Fed's balance sheet is, the more difficult for the Fed to exit in a way that meets our inflation objective, without creating instability in the real economy, thereby undermining our credibility and reputation. Overall, Plosser said it's a fairly risky monetary policy. Richmond Fed Lacker also urged the Fed to stand pat now, rather than easing policy further, as it's not clear whether monetary policy, by itself, can bring about any material improvement in economic growth right now. Nonetheless, Fed Chairman Ben Bernanke continued his pledge to use all policy tools to support the economic recovery. In Europe, Italian Finance Minister Grilli said that there are several options for Greece to fill the funding gap resulting from the 2-year extension of fiscal adjustment granted. And he's optimistic that EU finance ministers would come to a decision next week. IMF Chief Lagarde will cut short his Asian tour to attend the Eurogroup meeting in Brussels on November 20th. Lagarde said that it's important to focus on the same objective, and that is to make sure Greece can operate on a sustainable basis and re-access markets as early as possible. Lagarde has openly dissented the EU finance minister's decision to loosen up the target of lowering Greek debt to 120% GDP until 2022, rather than 2020. On the data front, Euro current account and trade balance will be released in the European session today, and Canadian international securities transactions, USTIC capital flow and industrial production will be featured in the US session.